What's going on, traders? I don't know if I was on mute to start the day. You guys already know the mute button. Not feeling the best, but going to hang in there. Going to bring in my brains to bring the energy today. Normally it's me, but today it's going to be Chris. What's up, dude?
What's going on, Mitch? Yeah, I got your energy. I'll make up for it. We got a great show, everyone. I mean, we have the SPAC King, Julian Klymochko, joining us on the show. He's been a frequent guest here. One of the first guests we ever had way back in October and November. So we're excited to have him back on, and what a great time to bring Julian on. We're going to talk about SPACs, and the big thing you're seeing out there, right, is SPACs are coming back. You know, we've got lots of movers. We've got former SPACs trading higher. We've got SPACs with deals trading higher. And we're starting to even see those pre-deal SPACs start to trade back up to $10 and above. So great time out there to be following SPACs. Great time to have Julian on the show. So super excited for today's show.
Yeah, you know, it just goes to take a look that, hey, maybe if you would have held some of these at those 10s, even lower than 10s, patience pays off a lot of the times. All right, let's go ahead. Definitely. Let's get into some headlines. Let's take us back, Chris. You got this.
All right, guys. Yeah, so a decent amount of headlines to get to, and then we definitely want to get into our watch list and all those movers out there. So a couple SPACs that we'll get to in the movers that are falling, actually. We have Genius Sports, GENI. So shares are down on a share offering. The company announced a proposed public offering of 20 million shares. That's 12 million from the company and 8 million by selling shareholders. So Genie trading down on that news. Then we have Playboy, PLBY. So Playboy shares also down on a share offering. The group filed for $4 million share common stock offering. So both those stocks, you know, have been up and now getting that share offering out there and trading down on that news. We have some news out from Hyliion today, HYLN. So they announced the expansion of their Austin headquarters. That's going to beef up, you know, them being able to roll out that new hybrid unit and also the launch of the Hypertruck ERX. And then they also added Rochelle Frank as the Vice President of Operations. She has over 25 years experience managing facilities and assembly programs, previously working for Chrysler, Navistar, and most recently Daimler Trucks North America. So a decent ad there to really boost Hyliion going forward. So keep an eye out on that one. It has been a decent mover. Couple of dates to watch. If you have your pen and paper ready, we have ACIC merging with Archer. They have an event this week on June 10th where they will unveil that electric vertical takeoff and landing aircraft. So keep an eye out on ACIC. I think, you know, that we're going to see this one move a little bit this week. We've already started to see some of these eVTOL companies, you know, announce deals and get ready to fly the skies. So look for Archer to have a strong week. And also Luminar, that's LAZR, hosting an event on June 15th. You know, as I've said, we've got lots of these LiDAR companies, and Luminar, one of the leaders, and they're going to have that event this week that hopefully will provide an update on the company going forward. So keep an eye out on that one. And then a couple mergers that went through recently. So we have VWE. This is Vintage Wine Estates, formerly BSPE. This is one, we had the company on the show not too long ago. Shares trading at $11.93. They have popped in those first couple days of trading. This is one that's kind of gone under the radar. Not getting the same coverage as some of these other SPAC deals like SoFi and Bark that have completed. And it compares nicely to Duckhorn, which recently went public, ticker NAPA. So Credit Suisse out today with an outperform on Duckhorn. And a $23 price target. I think we start to see some analysts dip into Vintage Wine Estates, you know, with the pure play wine play looking nice going forward. So keep an eye out. VWE, that deal has been completed, currently trades with the new ticker. Merger between FSRV and Catapult was approved, going to trade under the new ticker KPLT. And then a couple votes. We have IACA setting a vote date of June 28th for Taboola. HOL, Helicity, setting a vote date of June 30th for that combination with Astra Space, a space company that had an acquisition announcement yesterday. Then we also have THCB merging with Microvast, setting a merger vote date tentatively for July 16th. This one has been moving nicely over the past couple trading days as well. And then yesterday, VPCC, that merger announcement with Dave, shares ended up trading flat, not following the same pattern we've seen where these deal announcements end up trading positive on the day, 1 to 3%. Didn't trade down, but it was very flat on the day. So keep an eye out, on that one to see how that reaction comes over the next couple days. And then, of course, some of our top movers yesterday, Clover Health, CLOV, Nikola, NKLA, Lordstown Motors, RIDE, Churchill Capital, CCIV, and Virgin Galactic, SPCE. We'll dive into some movers from today in a little bit. And then no deals today, but we do have one rumor out there. So Bridgetown 2 Holdings, that's ticker BTNB. This is a SPAC from Richard Lee and Peter Thiel, the founder of PayPal and Palantir. So Bloomberg reporting that BTNB is in talks with Property Guru, which is a Singapore-based online real estate firm. Also has operations in Vietnam, Indonesia, Malaysia, and Thailand. This could be done at a valuation of $2 billion and announced in July. Remember the first Bridgetown SPAC, BTWN, is rumored to be working on a deal with Indonesian travel company Traveloka. So both of these SPACs, were among the best trading pre-deal announced ones. So BTNB traded all the way up to 14, now trading at 10.20. Shares were up about 6% pre-market this morning, now up about 1%. If you want exposure to the Southeast Asia market, these are two SPACs targeting that industry. And, now we have an online real estate company in Singapore as the possible target. So that could be a strong deal announcement if we get that next month. And then, of course, turning to our calendar. So as I said, that FSRV vote with Catapult was approved. Tomorrow we have votes for Kappa and THBR. And then later this week, VGAC, CCX, SSPK, and ACTC all having merger votes. This exciting June calendar with so many votes ahead. So we're going to dive into that with Julian definitely to find out which dates and which SPACs he's watching in the month of June, but exciting times ahead in SPAC land. What do you think, Mitch?
Yeah, one of the things that we've been seeing is a lot of excitement coming back to some of these actually being looked at for short interest. We'll talk a little bit about one that definitely rocketed off today. I'll give you an ability in a way that you could have attacked this stock today. So let's go ahead and let's take a look at our watch list before we get the King on. But wanted to give a shout out definitely in the chat. Appreciate everybody giving me some good love. Definitely Matt Higgins. I would love some of those Magnolia cupcakes. We'll definitely take some. Can't go wrong with the Magnolia. Definitely not. Let's keep it going, guys. Let's look here. What other we got? I'm looking. Someone asking about IPOF. I don't see news out there, but I did talk about that. I could potentially see this one running. Do you see anything, Chris, or is it just kind of a good day?
Yeah, just kind of a good day. I don't see any news. It still has that rumor with Equinox, but there hasn't been any update. As we talked yesterday, I think there's strong speculation that IPOD or IPOF gets a deal with those new Chamath SPACs coming out.
All right, let's go ahead and take a look at our watch list because we were having a lot of things moving. We're going to go ahead and go into one I actually put on my Twitter last week as my favorite chart in the SPAC game right now. So let's go ahead and take a look at the watch list. All right, guys, we got a bunch of stocks going and moving. John Doe will touch ASTS at the end. I got you. Definitely we'll take a look at that one. Of course, Clover with a big move up today, guys. And really, one of the things that I would point out on this stock is that I like approaching these and trying to get these off the VWAP. If you look, actually, I'll try to put this full screen so that you guys can actually see this. Maybe I need to go to, let me get you some more in-depth charting here. Let's take a look here. As you guys can see, some of the stocks that I was watching today, you guys are getting some access right now.
That behind the scenes look right now.
Yeah, you guys are not even allowed to see this. All right, let's keep it going. Let's go into that. So Clove, how can you approach this stock today? So I like using a VWAP, guys. A VWAP is what I like to attack here. So right here, off the 1 minute, you got a good push up. It kind of cleared that VWAP look and then quickly came back up. And once it goes above this, what you want to see is kind of start drawing kind of this trend line look here that you got here. It's really good. It's a really good look. Once you kind of get this third resistance try, I always talk about it, guys. 1 up, 1 down, 2 up, 2 down, 3 up. It tried to break out there at 1844, and it actually created a wick, went right back down to support right after that VWAP, and then really started rocketing off, guys. That's how you could have attacked this. And look at that rocket from 1820s up there towards about 2493, just off of a regular pattern that is common. This is a common pattern there. So I definitely wanted to point that out. What do you think about that pattern there, Chris?
Yeah, I like that. Clover getting lots of attention as a short squeeze candidate. The last data I saw was that over 36% of shares are short. So I think this one's going to be in play for a couple days, until we see that short volume go down. But as you already see on that chart, though, it was up 100% today. It's up about 50% now. So it has fallen down. So just be careful chasing this one. Watch what Mitch is saying, about that entry and following those trend lines. You don't want to get caught, chasing this thing up, at all-time highs, which it was actually trading at earlier. So just be careful with these momentum names, these short squeeze names, so you don't get caught chasing.
Yeah, at the end of the day, you got to remember what kind of trader is trading this. And it's usually going to be a day trader with big sizing, just trying to get a couple cents, maybe even 25 cents, not probably even looking at a whole dollar, let alone trying to get this one here as a long-term investment. So definitely a good opinion there. MP was my favorite one. This was my favorite chart. I had put it up on my Twitter, guys. If you guys follow me on Twitter, I talked about this one. I said, man, when's MP coming back roaring? Today, 10% move, definitely looking good. Starting to really break out through that trend line. Now looking like it wants to head towards the 40. I'll look for a pullback closer towards kind of 35, but a strong day for MP materials.
Yeah, MP has been one we've talked about, for months, right? It was also one of our first interviews was with MP CEO James Litinsky. This is a rare earth mining play, and I think the story is just it's there and it's going to stay. So watch your entry points. You had the chance to get into this one a couple times, at decent drops here. But yeah, now it looks like it's going to head to 40. I don't know if we're going to see a pullback, anytime soon. So maybe wait on an entry here, but love the long-term story for MP materials.
Yep. Last one I'll bring on before we get to our interview is going to be Mile. Mile is one I've been really liking off of that low. And I mean, look at this daily chart. It's had it's barely 2 days red in the last kind of month and a half. So definitely keep your eyes on this one. I'm going to keep my eyes on this one. I like this one long-term, guys, just because it could keep coming on up with insurances. One of the ones that I've been following, this one is a bigger stock. That's Lemonade. Also kind of making a move up in similar play, guys. So keep those on radar. They kind of move hand in hand, even though they're kind of completely different price ranges. So that's one of the ways that I like to stick with them. And I've been talking about the gambling stocks coming back just for the long term. Want to bring these up. Penn, DKNG, having a good day. Let's see if these can come really back, because of course we have some cheaper SPACs, RSI, and then of course GNOG. that are starting to look good. So we'll see if these kind of continue in the gambling industry. All right, let's go ahead and let's get into everybody's favorite time where we unlock the SPACs. We've been talking about different patterns. We've been looking at different moves. Chris and I have been watching the supply and demand change in the SPAC, and I thought no other way than reaching out to the king himself. So, Chris, go ahead, introduce him. Who's the king out here? It's not Chamath. I'll bring him in. Let's go ahead, bring him in here. I saw someone mention that in the chat. I was like, come on. You don't know who the king is?
All right, guys. Yeah, super excited. Let's go ahead, smash the like. Let's get those likes up. We have a great guest on the show today. One of our favorite and first guests we had on the show, Julian Klymochko, the SPAC King. He is the CEO and Chief Investment Officer of Accelerate, runs a couple SPAC-based funds. Welcome back to the show, Julian.
Hey, Chris. Hey, Mitch. Excited to be here on SPAC's Attack once again. So let's get into it. A lot going on out there.
Definitely. We're going to ask about some patterns, everything we've been looking at in the industry. And of course, it looks like they're asking for you to share your reign with Chamath, but I don't know how that's going to happen. I think there's only one seat to the king, so we'll have to see that. Let's go ahead and let Chris ask some questions, and I'll be back with some of my own.
All right, Julian. So we, of course, know a lot about you. We know you as the SPAC King. I'm sure we have some new viewers out there since the last time you were on. So just give us a brief overview of your history in the market and what your involvement is with SPACs here.
Yeah, thank you, Chris. And so to give you a bit of background on myself, been running hedge funds and alternative strategies for over a dozen years. So most of my career prior to that, I worked in M&A for an investment bank. So seeing the inside and outs of deals. I've done a blank check company myself, and I run the world's first SPAC-focused ETF, the Accelerate Arbitrage Fund ETF, trades on the Toronto Stock Exchange under the symbol ARB. And been following the SPAC market since 2013. I've invested in probably over 300 SPACs in my career and have looked at pretty much every single SPAC out there. And so that's my wheelhouse. That's what I look at every day. And there's a ton going on, a ton of growth, and super exciting stuff happening in the blank check space today. And so there's a ton of things to talk about.
Yeah, you guys heard it. This is the SPAC King, invested in over 300 SPACs, the first SPAC ETF out there in North America. So we're excited. So Julian, let's dive right in. The biggest question out there, we've seen these pops after these deal votes from, OWL, SoFi, Bark, and many more. Also, stocks trading positive on the deal announcement. So the big question out there is, are SPACs back? What do you think?
Yeah, I think so. I mean, you look at some of the what happened was there's like a lot of criticism on a certain number of key SPACs. Obviously, we had CCIV and Churchill Capital 4, the Lucid deal. That was just bid up too high pre-deal, but it's still trading very well, $25 per share. So it has had a bit of a run lately. Also, Clover Health, that one did knock down Chamath a peg or two, but it's basically up 150% over the past 3-4 weeks. And so he's really getting his reputation back. And then ones that faced a lot of criticism, call it the Nicolas of the world, probably well-deserved on some of those. But nonetheless, they have come back as well. So in the first quarter of the year, we had tremendously positive sentiment. The market was running red hot. And that turned pretty quickly. The market peaked Feb 19th, went into a bear market. It bottomed March 24th and sort of just flatlined since then. And last year, if you remember, we'd see a lot of these SPACs pop on announcement of a deal. But that price action has really now migrated to now the deal vote. And once the deal closes, as you indicated, we saw it on OWL, we saw it on Bark, we saw it on Latch. So I'm watching a number of deal votes coming out to see how these stocks trade in the de-SPAC process, because that's really important. But, it represents this big inefficiency in the market that I'm seeing. And it's only a matter of time before that starts migrating back into the deal announcement, because you're seeing a number of very high quality deal announcements, definitive agreements with SPACs and private companies that really are being ignored by the street. I had a tweet out yesterday that said, now, how often do you get to invest in top tier late stage venture capital financings along with Tiger Global at prices lower than they get access to? I mean, that's practically unheard of for everyday investors, but that's now available in many, many SPACs, and quite frankly, doesn't get very much attention at all. So that is a key dynamic worth paying attention to.
Yeah, so, I guess the big question, is before we saw deal announcements where we'd get, these 40, 50% pops on day one, and then we shifted to the opposite where deals, wouldn't pop at all, and now the valuation period's coming post-deal. Do you think we continue to see this pattern, where the SPACs kind of trade in the $10 to $11 range, and then, investors wait until that merger vote goes through to really dive in? Or do we meet somewhere in the middle, with some 5 to 10% pops on deal announcements coming back?
Yeah, I think you really nailed it. It's more of the latter in terms of some of that SPAC pop coming back. I mean, 50 to 100% pops on the first day. That was happening in Q4 of last year and Q1 of this year. That's really unprecedented and probably not coming back, but I wouldn't be surprised to see, up 10, 15% on deal announcement, because if you think about it, why should these rally on deal vote? I mean, all the information's out there already. So if you like a deal, you should get in before that. And the key indicator is the volume. So if you look at the volume on deal announcement, it's down significantly compared to, call it, 4 or 5 months ago. And that's a real key indicator, is because a lot of these SPACs held pre-deal are held by arbitrageurs, right? And they're not looking to hold on to the pro forma entity. They're looking to obviously sell at a profit. So you need a sufficient amount of speculators coming into the SPAC on the deal announcement to basically have the ARBs exit the stock. Otherwise, they'll redeem, and then we're seeing the price action post-redemption on the de-SPAC. Perhaps the float's a little bit smaller, but you don't have this big hangover in the stock where it can now rally. However, we all know markets are somewhat efficient, and it's only a matter of time before SPACs start pricing in this de-SPAC rally prior to that, right? So I think that's more so going to migrate from, around the vote or shortly thereafter up into either the deal announcement or the time period between announcement and the vote.
And we're starting to see a little bit of the catch-up trade happening too, with some of these deals that recently completed that dropped below 10. Yeah. Now getting back up to that original $10 level, like Lightning E-Motors, and a couple others. Do you think we continue to see that makeup trade where they get back to $10, or are there still some deals that investors are just, going to stay away from?
Yeah, it's really hard to make a blanket statement. You got to look at each and every stock, SPAC, whatever the security is, on a standalone basis. There's some high quality ones and there's some low quality ones. So some will drop very, very quickly and some will rally to new highs, right? So it really depends on the specific security. Can't really lump them in. I mean, in terms of SPAC deals, there's some good ones and there's some really bad ones, as we all know. So it's real important to do your due diligence and know what you own.
So Julian, we've got you on the perfect time with, SPACs coming back. We also have this phenomenal June calendar, right? With so many vote dates taking place, and we're continuing to add, new deals, votes, June 30th and the end of the month. What's kind of on your radar as some of the top SPACs with votes coming in June that maybe investors should be paying attention to, to see if they meet this pattern, and maybe that could be great targets, after a vote date?
That's a really good question, because as you indicated, there are just so many this month. And I think, number one, it's important for the SPAC ecosystem, because as we all know, one of the main reasons for the bear market was just an oversaturated SPAC market and an oversupply of blank check companies. And so there's a number, like a large number, that are going to de-SPAC this month, which is positive because surprisingly, it's over one quarter through June, and we've had one SPAC IPO that's today for $50 million, and we've had countless number of de-SPACs and more upcoming. And so, yeah, a ton of interesting ones. One that I have on my radar, actually two that are on the 10th, CCX and VGAC. So CCX is another very large Churchill Capital deal. That is the Skillsoft merger. It's traded very, very poorly. So I think if that one can get a bit of a rally, that will be a key indicator worthwhile watching. And then the VGAC on the same date on Thursday as well. Heading into next week, we have CRSA, HEC, ACAC. So those ones are worthwhile watching. And then the week after, TBA on the 22nd, Thoma Bravo, which I believe was the first $1 billion warrantless SPAC, super high profile deal, because Thoma Bravo is one of the largest tech private equity firms out there. FRX on the 24th, that one's worthwhile watching as well. The Beachbody deal, and then, man, we just have so many. I think there's at least 20 de-SPACs this month. So it's positive to see. As I indicated, we will see the supply decreasing. And if you subscribe to the theory that this bear market that we're now recovering from was caused by an oversaturation, it's great to see a large number of de-SPACs and very few IPOs, because ultimately that brings down the supply. And Econ 101, supply demand indicates we now have demand increasing, supply shrinking. Price can only go one way, right?
Perfect. Well, I hope everyone watching was paying attention. You just got a couple to put on your watch list. Again, not advice, but those are the ones that Julian's watching, this huge calendar in June. I have to ask this question, which might actually change as we see more SPACs IPO. But before, when we had you on the show, we were seeing difficulty for yourself and others to even get allocations of SPAC IPOs, and they would shoot over $10. Yeah. Then we saw these units, price at $10, and they were trading below $10 on the public markets. Did your strategy change? Were you waiting to get allocations until they went public, or were you still, getting in at that $10 price point, knowing you can get the arbitrage trade later on?
Yeah, it all depends. So we still subscribe to the odd IPO if it's of very high quality. But as you indicated, sentiment went from red hot to ice cold in a matter of months, such that previously the average SPAC IPO is going up 7 to 8% on the first day, right? And this is just for a cash shell that's trading at 1070, 1080. Now they're trading at like 995, 990. I consider that an arbitrager's paradise. Imagine buying units at 995. You're getting 1/3 of a warrant as well. You have the right to get back your $10 plus accrued interest on the common shares and keep the warrant. I mean, who's going to complain about that trade? It just seems like a phenomenal risk-reward proposition. If you can have your downside covered through that $10 plus accrued interest redemption clause, if you don't like the deal, you get a free look at the deal, plus you get warrants. I mean, come on, who wouldn't want to take that? So arbitrage's paradise right now in new issue SPACs.
Yeah, so that's one of my questions is, with SPACs, we have, kind of a different theory out there. Some issue warrants, and we're seeing some without warrants. So, a couple questions here, first would be, do you tend to avoid SPACs that don't issue warrants? Or, if it's a big enough name like the Thoma Bravo one, are you still inclined to, just bet on the jockey here? Or do, warrants really matter in terms of getting in on these units?
That's a great question. And I like to diversify among strategies. So if we look in 2020, early 2021, it was all about betting on the jockey, where you'd have the majority of your return from the common shares. For example, one of my favorite ones was the first Longview SPAC. And they did the Butterfly Network deal. That was a big win for us. So we owned those pre-deal, popped about 50% as it became Butterfly Network. And that was really betting the jockey, and the warrants didn't really play. They're a small portion of the return. Now that dynamic completely flipped this year, where basically nearly every single SPAC definitive agreement announced gets pinned to like 990, and 100% of the return is in the warrant, right? So you look at some of these SPACs that are considered of lower quality. They either had to, some have to offer an entire warrant, like one full warrant per unit. Those, they're still pinned to 990. However, the warrant's now worth $1, so your unit return is close to 10%. Meanwhile, a warrantless SPAC, they announce a deal, and it goes to 990, and you get back $10 on the redemption, and that's it. So making a return 0. So I like holding both. It really depends on the sentiment of the current environment. The sentiment is still quite poor these days, so the majority of your return will likely come from the warrant. However, if we enter a new bull market, which I'm expecting later this year, the majority of the return will revert back to the common shares. So I think it's important to diversify. You're fine buying some warrantless SPACs. Personally, we gravitate towards the biotech ones. We've had some big winners there, specifically in the CM Life Sciences ones. Those are always a hot commodity, certainly, and we try to get in on the IPO. But then there's also the low-profile ones that do have, significant warrant coverage. And sometimes they have an overfunded trust as well, meaning they start out with a net asset value of $10.10, $10.15, sometimes even $10.20, and we have some big winners from that as well. One that we did buy were the MUDS units at or below $10, and the announced TOPS deal. We still are long that in the ARB ETF, and that one was a big winner. It had an overfunded trust, and it had great warrant coverage. So, I'm really a fan of both. I like diversifying because each strategy can work in a different environment.
Yeah, so you already hit on this, but just to expand, the opposite side of the no warrant spectrum, we have the SPACs that include a full warrant at a 1-to-1 ratio, which you touched on. One that I am long is Lego, so LEGO. Yeah. And we have the warrants trading around $1.50 right now, and the common trading 990 something, on that Algoma Steel deal. Yeah. If you have these SPACs with the 1-to-1 warrant, does that make you more inclined to get into these just knowing, that there is, almost a guaranteed opportunity for the arbitrage trade there?
Yeah, and so my thoughts on that is that markets are somewhat efficient, and when a sponsor team wants to, take a SPAC public, they need to offer a certain amount of incentive for investors, hedge funds to subscribe to the IPO. And typically the ones that can do the warrantless SPAC are those very high profile, Thoma, Bravo, firms like that, Khosla Ventures, they can get away with it. However, the ones that typically have to issue an entire warrant per unit, they typically have, not nearly as much market recognition or the reputational capital of some other sponsor teams. And really that's how they get priced, overfunded trust, higher warrant coverage on the lesser known teams, perhaps a first-time SPAC sponsor, or perhaps they did some deals that weren't well, they didn't trade well previously. And so that's somewhat priced in. However, if they are offering substantial warrant coverage or, these rights and things of that nature, overfunded trust, then, they can pay off pretty handsomely because you have a much higher baseline return. That being said, the ones that offer higher incentives for investors to participate through more warrants and overfunded trust, things of that nature, typically they're much, much smaller issues because the sponsor team has less reputational capital to raise a significant SPAC. So typically the ones with much higher warrant coverage are generally in the $50, $100 million range. Meanwhile, the warrantless ones are typically much, much larger.
Perfect. So Julian, first, before I get to more questions, I just got to tell you the chat is absolutely loving hearing this knowledge from you guys. The SPAC King is here. I see Ruel saying he's going to go back and watch this show several times because there is just so much knowledge here. So Julian, just got to give you a shout out here, for, again, being such an expert and a leader in the SPAC field. I know the chat appreciates your time today. Let's dive into, maybe some former SPACs. So some of these de-SPACed companies. What have been some surprises for you? You know, we've seen Playboy really take off this year. Nikola come back. What names have, you know, really surprised you at how maybe they've traded a post-merger deal here?
Yeah, Playboy was a huge one. That was really a dark horse. I remember we actually held the Mountain Crest Acquisition 1. I believe it was MCAC. But nonetheless, it didn't really get a lot of attention post-deal announcement. It just started slowly creeping up on the D-SPAC and just really took off to nearly $50 per share. So that was one of the biggest wins this year in terms of post-SPAC equities. And others that really got beaten down, you're starting to see them come back significantly. And these, like the dynamic over the past few months up until a couple weeks ago was these hyper-growth, pre-profit, pre-revenue names really got beaten down as sentiment changed towards those types of securities. Highly speculative, hyper-growth, you know, space travel, electric vehicles, things of that nature. And you are seeing the beaten down D-SPACs having a significant rally. I'm surprised to now see Clover Health as a so-called meme stonk. And I think that's more so driven by the high short interest. And that's one thing that's starting to kind of light a fire under these D-SPACs is many of them did generate quite a bit of interest from short sellers, whether it's Nikola, Clover Health, and a number of others that did have short reports come out on them. That's kind of biting the short sellers in the butt here as the whole Wall Street Bets Reddit crowd really chase after these heavily shorted names. And you're starting to see it if you look at Lordstown Motors, Ride, Nikola, NKLA, Clover Health, CLOV. All of these are just absolutely ripping. So that's one dynamic to look at, kind of a short seller covering driven rally. And the other is that dynamic that we talked about previously is these D-SPACs rallying, just surging post-deal vote. And so that is a dynamic that's really worthwhile watching. And perhaps there's a play to preempt that, maybe even through the warrants. I never really advocate to trade warrants. I know a lot of individual investors like them because they're highly volatile. Remember that a warrant is a highly leveraged play on the stock, but you know, if it's in your kind of play portfolio, then you know perhaps it's worth a gamble in some of those warrants pre-deal closing, because a lot of the times you have arbitrageurs selling these warrants at perhaps $1.80, and then all of a sudden the stock takes off to $15 post-deal vote, and next thing you know, those warrants are at $3-4. I think I saw someone post some interesting warrant statistics, and people have had big winners recently on the warrants of, say, Ride and Clover Health. So it's, you know, that's something worthwhile considering, but keep in mind, never put more than you can lose into warrants because it cuts both ways. They have high leverage to the upside, high leverage to the downside, and warrants can ultimately go to zero, as can stocks. I mean, this is risky business. So obviously diversify and, you know, never risk more than you can lose.
Perfect. So, Julian, we talked a little bit about, you know, some names to watch with votes in June. Any names you want to throw out that are, you know, some recently announced deals or deals that don't have a vote date set that maybe just are undervalued and not getting the attention that you think they deserve, you know, for a post-merger play?
Yeah, one that came to mind, I don't have a position in this one, but it's Dragoneer's SPAC, DGNR. So they struck a deal with CCC Information Services. Actually, I hosted the CEO on my podcast, and I liked what they had to say. I think that they have a great shot. I mean, it's a business that has been around forever. They used to be a public company. They went private. Now they're going public again. The last time they were a public company, they had roughly 400% return for shareholders. They made their private equity owners a lot of money. And now I think that they can earn public shareholders once again a lot of money. So CCC Information Services, Dragoneer, I mean, they're a top tier firm, DGNR. I think this is a real solid deal. And this SPAC, it's trading around $10 per share. So you're not paying that premium. You're getting in at the same price as other, you know, high-end investors. I believe, Fidelity, T. Rowe Price, Mike Bloomberg's family office. The other dynamic that I think is super, super interesting, and we saw this in a deal that just got announced yesterday. And so we do have a position in this one in the Accelerated Arbitrage Fund, but it's VPC Impact Acquisition 3. The symbol is VPCC. So they announced the Dave deal yesterday. Yeah, Dave is this consumer banking app. And what caught my eye is that the most prolific venture investor out there, Tiger Global, they're running tens of billions of dollars. They're leading this pipe financing at $10 a share, and now investors can buy it at like $9.95. So it's not too often that you can invest alongside, leading late-stage VC investors and get in at a lower price after they underwrite the deal. So that is a couple interesting ones that are on my radar. I think it's a good thing for investors to look on the deal announcement, see, hey, who's in the pipe here? And sometimes you're seeing some very high quality investors, some with like Valpo, Seth Klarman, and things of that nature. It's worthwhile taking a second look at those, because when you have these very high quality investors leading an investment at $10 per share, and then you as a regular investor has the opportunity of buying at $9.90, that is an opportunity that should be looked at closely.
Awesome. And we got to talk a couple of the big names. So Chamath Palihapitiya, of course, originally planned to launch IPO A to IPO Z. We've seen IPO A to IPO F. And now we're getting a little bit of a break where we're getting 4 biotech SPACs coming out, DNA A through DNA D. What do you make of this? And will these be SPACs that you're taking a look at getting allocations in?
Yeah, we'll take a look at them. Historically, the social capital SPACs are heavily oversubscribed, so we'll see. These are smaller issues. They're all $200 million, and they're all warrantless, which isn't too much of a surprise, because typically biotech SPACs don't come with a warrant. And so it's a different vibe than his initial IPO series, given that these are biotech focused, so completely different sector. And each one is very specific area of biotech, genomics and things of that nature. But I think in terms of sector specific SPACs, one that has one of the brightest futures are biotech SPACs. The thing is, there's so many private biotech companies that have a ton of upside that are just kind of waiting to access public markets. And I think that SPAC is a great vehicle for biotech companies. You've seen a ton of tech-focused SPACs come out, and those may be more challenged just given how competitive the market is. I mean, there's a limited amount of these so-called unicorn tech companies, and everyone wants a piece of them, but there's way more biotech companies, and there's far fewer SPAC investors focused on it. So I think it's a great area to focus on. However, biotech is perhaps the riskiest sector out there, and it's, you'll earn like 5 to 10x or you'll go to zero. I mean, a lot of these biotech plays are binary, where either it works and goes up a lot, or it doesn't and it goes to zero. So keep that in mind.
Yeah, and the other big name, of course, getting in the news in SPACs recently, Bill Ackman. So we finally got some news out there from PSTH. We don't have time to get into the whole deal structure, but what's kind of your takeaways from PSTH? And now that it has dropped, is there a decent entry point here compared to when it, was trading at the highest premium of all these pre-deal SPACs? What's kind of your takeaway this week?
Yeah, and so for a long time, I was warning investors that the Pershing Square SPAC was trading too high relative to its net asset value for a pre-deal SPAC. It was like way up here when everything else was trading at or below NAV. And people thought I was hating on Bill Ackman. No, I love Bill Ackman, huge Bill Ackman fan. And now that they have not announced a definitive agreement, but they gave some details to the market, and the SPAC has come down. So 2 things. The valuation that you're paying, it's roughly kind of 11, 12% premium instead of a 25% premium to NAV. So that has a big effect on my attitude towards it. So you're getting a much better entry point. And number 2, the UMG deal, Universal Music Group. I'm a big fan of that one, although we do have limited information at this point. It is one I'm looking forward to reading more about strong macro trends. I think the valuation makes sense, and it seems like a great opportunity for investors from what we know. Granted, it is still not a definitive agreement, so keep in mind the deal could still fall apart. We're waiting to hear, some definitive details and more details with respect to the financials on that one. But so far, so good in terms of what we see. We have a good merger target and a much more attractive valuation than what we were seeing a few weeks ago.
Awesome. And then the last question from me before we get to just a couple ones from the chat is, we keep hearing SEC. So you've been investing in SPACs, for a while. What do you think shakes out of all this? What do you think we see for changes? And are there any changes that you think need to happen with SPACs in regards to disclosures and items like that?
Yeah, I'm not too worried about it, especially if you're buying at a good price. I mean, if you're buying a SPAC at $10 or below, you don't really face a lot of the risk. I think where the risk was a few months ago, and that I was warning investors about, is if you're paying $12 for a pre-deal SPAC with $10 cash. That's where the risk comes in. And so in terms of what the SEC can do, they're making some noise about the forward-looking statements and the forecast. So I'm keeping my eye on that. And that will affect the type of companies going public via SPAC. You have some that can go public just based on their historical financial information. One of those would be the Dragoneer CCC Information Services deal. I mean, that's a strong company, been around decades with very strong fundamentals. However, if you have a pre-revenue, space infrastructure company, they're not going to work without having those forecasts. So me personally, I think forecasts add value to investors the more information we can get out there. But what is really bad to see is where these companies put out these very bullish forecasts and then 6 months later they withdraw them or it's not even close. Like we did see those on some battery tech and some EV company deals. And, that's one of the major risks is that a lot of these companies going public via SPAC are still not mature companies. They're still like startups. And with startups, yeah, you can put out bullish projections, but it's up to the investor to evaluate, does this make sense? Is it realistic? How probable are they to attain these forecasts? There's a lot that are saying, oh, we're going to get to $1 billion revenue in 5 years from like 10 million last year. Now that's quite the leap. I'm sure some can, and if they do, then the stock will be, on a massive rocket. But if they don't, many will disappoint, and you'll lose money on those likely. So that's something to keep in mind. You can't believe and take forecasts, as gospel. You need to take them for what they work, which is probably a bullish guess from management. You can haircut those if you want. You can completely disregard them, or you can do more due diligence on them and, try to come up with your own forecast. But keep in mind that, these companies forecasting triple-digit revenue growth CAGRs, that is highly speculative.
Awesome. So Julian, we could keep you all day because the chat just keeps dropping tickers in, wanting some opinions. So I'm just going to throw out a couple and, feel free, to skip if you want. But one that was asked by Ruel, and now I'm seeing Vu also ask about is THBR merging with Indie Semiconductor. Any thoughts on this and maybe the overall theme of some of these semiconductor companies going public via SPAC at a time when we're seeing a chip shortage? Is that a positive catalyst to watch?
Yeah, so certainly it really depends on the type of company and the channels that they're selling into, but certainly semiconductors have quite the tailwind behind them these days. So I think that's a sector worthwhile considering, and some of these semiconductors could rip quite a bit, and you're seeing it with some of the larger names in the market, and I wouldn't be surprised to see some of these semiconductor companies going public via SPAC. I wouldn't be surprised to see them do well, at least in the near term. So that's something to keep in mind is, that chip shortage and the various effects happening that are going through the channel.
Then we have Cahill asking about GIG, which just recently announced the Big Bear deal, and saying that this one could be Palantir's little brother. Any thoughts on this AI and machine learning company in this deal?
Yeah, and so that one, it's interesting. It is somewhat more so speculative these days, although they do have pretty significant revenue in terms of AI, like a mini Palantir. You look at Palantir, and that company is quite speculative in terms of their valuation is relatively lofty and really reliant on government contracts. But Big Bear is an interesting deal. It's kind of been missed by the market. It was announced just a couple of days ago, and it has not really caught on in terms of getting investors' attention. But I think it could be one worthwhile looking into. If you look that they did, they actually didn't do a PIPE equity financing, but they did a convertible bond issue led by Fortress, Marathon, Highbridge. So a bunch of hedge funds in there. However, you got to remember, they are senior to the equity holders in that they hold convertible debt. So they do get some upside, but they have some downside protection as well. So it's worthwhile looking into the details on these things and specifically looking at the capital structure too, because they're raising a bunch of debt and not equity. So debt instead of equity, especially if they are facing redemptions in terms of their cash. This is a SPAC with 358 million on their balance sheet. However, it's not trading very well at around 984 with $10 in the bank. So arbitragers will come into this one and they'll just try to do that arbitrage, which is roughly 3 to 4% annualized. Not a bad return in an era of zero interest rates. However, that puts the cash balance at risk. So on this one specifically, I'd be concerned about their balance sheet post-closing just because they are raising debt, not equity, in the concurrent financing, and their substantial cash balance that they're probably reliant on for this deal could be facing a risk as we come upon redemption. So that's something worthwhile considering.
Awesome. And then the last one here from Fast Eddie in the chat asking about SoFi. What are your thoughts on SoFi, previously IPOE?
Yeah, and so that has been a SPAC that has been, it's done tremendously well into the D-SPAC. It's kind of doubled. And I think the SoFi deal in and of itself really added some much needed credibility back into the SPAC space, because SoFi was a very high profile tech startup in Silicon Valley that could have easily gone public via IPO to much fanfare. I mean, if SoFi went public via IPO, it'd be like CNBC would be on it 100 hours in a week. You know what I mean? But they went public via SPAC, which really kind of brought a lot of credibility back to the space, which I think is much needed at this time. And it, frankly, brought a lot of credibility back to Chamath. So I think it's, as we see Clover come back, it's really kind of reloading his personal social capital and his ability to do more SPACs. So I think that's nice to see. I'm a big fan of Chamath as well. So I'm looking forward to him bringing some more high quality business combinations. And what people need to remember is, no one bats 100%, right? As a sponsor, you'll have some winners and some losers. The thing is, as long as you have some big winners and much fewer losers that are smaller, then, at the end of the day, on average, you're going to do well. So SoFi was a big deal, and it's been very successful thus far. So it's good to see.
Awesome. Well, as I said, Julian, we could keep you all day with all these tickers flying in the chat. But that's going to do it for questions. We've got to have you back on the show more often. We've been doing so many CEO interviews, but we got to bring the SPAC King back on here to drop this knowledge. So, guys, if you're just tuning in, you're going to want to save this video, go back and watch. We have Julian Klymochko, the CEO and Chief Investment Officer, Accelerate Funds, the first SPAC ETF in North America. That's ARB on the Toronto Stock Exchange. I dropped Julian's Twitter handle in the chat as well. Make sure you give him a follow. As I said on the show yesterday, he's one of the accounts I look at every single day because there's such knowledge and information there. So, Julian, what else can I say except thank you for taking time out of your busy schedule, joining us on SPACs Attack once again. We look forward to seeing you very soon.
Yeah, I look forward to coming back. Always happy to be on SPACs Attack. So thank you, Chris. Thank you, Mitch.
Thank you, Julian. You have a good one, okay?
All right.
All right, guys. Well, you heard it here at SPAC King. I mean, Mitch, holy cow, what knowledge that we got, and all those compliments in the chat, guys. Thank you. That means a lot to know that we had a great guest on today, that you guys enjoyed it, and to be able to drop some tickers in there and get Julian's opinions. I mean, holy cow on this information, Mitch.
Yeah, I mean, it's one thing that we've been watching for is the pattern that was talked about by Julian. We were looking at it also, we were looking to see how these SPACs were going to perform. And it just really started giving us that eyesight when we started seeing these kind of different stocks start moving. And really, this was kind of what I call the fifth wave, that valuation period, where you're really starting to look at the stock. You're getting even earnings come out, and that's really where you're going to start seeing some of these winners separate from the losers. And I think that's really what you're seeing also. One of the things that we were talking about also that I loved is how he mentioned how, hey, sometimes, you got to adapt. He talked about how he started looking more at those units and how they just seemed attractive. I mean, Chris was talking about these units also, because it did seem attractive. I mean, you're getting units at $9.95, $9.90, $9.85. I mean, with some warrants, I mean, it definitely is attractive an investment. So, hey, I honestly, what I would do, guys, is I would hit the replay right now and just start it over and hear that again, because there was so much there, guys. You guys can fill out a couple pages worth of notes.
Yeah, and Mitch, I mean, what was that big D word that he said too? Diversification. I mean, you got to have a couple different ways to play it. So you can have units with warrants, units without warrants, and maybe take a couple hits on these SPACs, because they're not all going to win, right? But you're going to get some big winners that can offset the flat ones or the drops. And, I love the conversation. You guys heard SPACs that Julian's watching in June, and CCX, Mitch, that's a good point. A Churchill Capital SPAC that's a very large one doing their vote. And could that be a sign, if that one trades positive on the deal, that we're really going to see that wave continue? And VGAC was another one mentioned, and GIG, the one that someone brought up in the chat, almost the mini Palantir, again, he said, it got announced a couple days ago, and it's kind of going unnoticed. And Mitch, again, the talk about SoFi, right? If this would have gone public via traditional IPO, gotten all that attention on CNBC, you just heard it from Julian, it would have gone much higher, but instead it went via SPAC, and it's still possibly a good play here for investors.
Yeah, definitely one to keep on watch out. One of the things is, this probably would have opened up at some premium of like probably double or 3 times the price, and you would have to wait months and months for it to get down to these levels for you to take the trade. I mean, for a while there, we thought coin might do the same, right?
Yep.
And you can look at that. That's the story right there. IPO or SPAC? What do you want to do?
Right? Would you rather take a little bit to go up, or would you rather go up day one and then drop every single day after that? I mean, I guess it's up to the companies, but to me, I'd rather have the SoFi chart, going forward, but to each their own. So
Definitely, guys. Well, I just wanted to say I didn't get a chance to talk about it because I didn't want to interrupt that great interview. I did sell some of Latch today, guys. I did sell some of it into the move. I still have a third of the position. I'm just going to let that third of the position ride now. But one of the things that we did get confirmation was confirmation of the pattern. And those were another reason why I took this trade and got some skin in the game, just because I wanted to see if the pattern really was developing. Now, we got some other names to look out for, like we just talked about. CCX, VGAC is going to be one on the watch. Definitely, let's see if those can start ramping. To me, the move up needs to be past 11 for me to feel like the pattern is still holding. It needs to not just be like a little pop. We're not talking about 5% pop. We're talking at least at 10 to 15% pop. So that's what I'm going to be looking for. And hey, I'll hold on some of my Latch. I have some Kappa that I did get in yesterday that's looking good. It spiked randomly in the afternoon towards 10:40. I got it at 10:06. We talked about it on the show. And then another one that I have holding in the same kind of pattern for the same look is FRX. So we'll see what happens, Chris.
Yeah, and guys, I just dropped in the chat the link. I put out an article on Benzinga with that June calendar. So we talk about it on the show every day, but I also have an article out that has all those June vote dates. It's missing a couple that I talked about on the show today, but I'll try to get in and update that. But Mitch, those are the ones I'm really taking a look at, right? Because the patterns here, and I think some of these June vote dates, aren't getting attention yet. And over the next couple weeks could be decent trades. I mean, you just saw that with Latch. I think we're going to see that with Kappa. And I think we're going to see that with some of these other big names with June votes. So, but that's going to do it for our show today. I want to thank everyone, for sticking with SPACs Attack, me and Mitch here. Another great show. One of our favorite guests, right? Julian Klymochko. I mean, he was one of our very first guests because we wanted someone with the knowledge in the SPAC game to really help our show at the beginning. And he has graciously returned every time we've asked him. He's been at our boot camp events as well. I mean, he is a friend of Benzinga's, and we were so happy to bring him back. And as Mitch said, I mean, I'm going to go back and watch this interview because I was asking the questions and couldn't keep up with all his knowledge, but there is so much there. This is a show to definitely watch again to hear from the SPAC King himself.
Yep. Looks like, Chris, we're going to have to do another one of these. Another SPAC under $10 that could eventually start moving. We're going to have to do another one because we've done some great ones before. That was when we originally gave CCIV, and what a monster it was at 10.05. I still wish I would have had some, because I would have just been holding. I would have been holding through all this time, and then I understand why you're a bull. You're in at 10.05. I mean, sit back, relax, enjoy the show, and see if the company can really meet those productions. One of the things to watch out for, CCIV out there, you guys lucid dreaming, I can't blame you, but keep your eyes out on production. If that changes immediately, you're going to see a quick reaction to the downside. So be careful out there, guys. I know it's been pushing up. I know there's a lot of people pumping this one. I think you got to wait till the D-SPAC. I think you got to wait for the merger vote announcement, but we'll see if it continues running. Like always, guys, we got Power Hour coming up next. Great show, like always. Let me make sure that we got this redirect set. It's been that kind of day for me. I'm just going to try to make sure, but Chris, you can wrap up here.
Yeah, so and remember, later this week, we have Dr. Jonathan Rothberg joining us. He's the founder of Butterfly Network, BFLY, and also Quantum Psi, which is going public via Kappa, CAPA. So what another big name to have to talk about these SPACs and why he chose the SPAC route over traditional IPO. Tomorrow on the show, we'll be talking some of those SPACs that are getting added to the Russell indexes and maybe some of the potential short squeeze plays to watch, giving you some trading ideas along the way. But exciting interviews, some due diligence, and some trade ideas. As always, stay tuned. SPACs Attack.
Definitely, guys. Let everybody know how informative this episode of SPACs Attack was. Do me the favor, hit the share after the show. Let everybody know, hey, you want to learn about some SPACs, some ways to approach it? Watch this interview. Check it out, guys. We'll see you guys up next. Power Hour already live.